This is your LMAX Exchange technical update for Thursday, July 27, 2017. Euro dollar. So the euro has now broken above that critical range high at 117.15 going back to 2015, and this breakout could suggest that the market is finally putting in a longer term bottom ahead of what could be major upside over the medium to longer term. At the same time, as we have warned in recent trade, daily studies are looking quite extended, and so the risk at this stage for the market to continue now following this breakout to continue to extend gains materially is very low, and there should instead be some form of a short-term corrective, overdue corrective pullback to the downside before the market considers the possibility of establishing a higher low and continuation of gains significantly beyond 117.15. So again, we have broken above 117.15. It does suggest that the market is now putting in a longer-term bottom, but at the same time, on a short-term basis, there still is risk for daily studies to unwind a little bit before the market considers this longer term breakout. Sterling dollar. So cable is traded back up towards its 2017 high above 131, and the question here is if the market will want to break out beyond this area and trade up towards its next key measured move extension at 135. The market, since breaking above that previous range resistance at 127.75 earlier this year, has opened the door for that 135 objective following a consolidation that we had seen earlier this year off that 2016 multi-year low at 118.40, but again, there could still be more consolidation around the 127 to 130 area before the market is ready to make that push. The chart here is constructive following the breakout above 127.75, and there is a possibility now, a strong possibility, that we've seen a longer term base down at 118.40, but at the same time, the market could see some more choppy consolidation before heading up towards that next measured move extension at 135. If we do see any setbacks in the sessions ahead, they should be very well supported into the 127s now, with only a break in this market back below the 25.90 area to compromise this newly adopted constructive outlook for sterling dollar. Dollar yen. So with dollar yen, the market continues to adhere to this range going back several weeks, several months even, most of this year, and the most recent stalling out above 114 has confirmed that range, and the market is now potentially at risk for extending declines back towards the range lows down around the 2017 low just ahead of 108. Euro Swiss. So Euro Swiss has broken out over the past several days. The break above 110 was a critical development as it opened the door for a push up towards the 2016 high at 112. This area is a major resistance zone as this is the highest level that the market has reached since collapsing that historic collapse that we saw back in January of 2015. So this is the highest level that we were at since that historic collapse, that S&B collapse in Euro Swiss back in January of 2015. This level could be tested now over the coming sessions. At the same time, the market is extended short term, and so we could see some short term corrective pullbacks before the market looks to really establish above 112. Aussie dollar. So Aussie dollar has broken above some critical resistance for this market in the 78s over the past several days, and this has opened the door now for fresh upside and the potential formation of a major base here. The next upside targets the May of 2015 high, which comes in around 81.60, but daily studies here are also quite extended, and so there is risk building here for some form of a short-term corrective pullback in the sessions ahead. Dollar CAD. So dollar CAD has extended its incredible decline over the past several days, extending it into Wednesday to fresh 2017 lows, also taking out the 2016 low at 24.60. Now we have a case where not only are daily studies here violently overextended, but weekly studies are also into oversold territory, with the market finally taking out that 24.61 2016 low. And so while the price action has been intensely bearish, there is this risk building for a healthy correction to the top side short term at a minimum. A break back above 127 here would be required to suggest that the market is finally bottoming out and ready to see a more significant correction. Kiwi dollar, the New Zealand dollar has extended its run to fresh 2017 highs, with the market taking out a critical psychological barrier here at 75. The market had been very well capped in the 75 area, but the breakout now opens the door for the next extension up towards next key medium-term resistance, which comes by that 2015 high, the April 2015 high, up around 77.50. Daily studies again are extended, so on a short-term basis there is risk for some form of a pullback in Kiwi dollar, but ultimately the breakout is quite constructive, and this does set the stage for the next extension up towards the 77 area. SPX 500. The S&P 500 has traded up to another record high, and the market could be in the process of finally looking to roll over sooner than later after meeting a measured move extension at 2480. This follows a consolidation between 2400 and 2320 earlier this year, that 80-point consolidation, projecting an 80-point projection to the upside at 2480. And so with the market extended, with the market at record highs, and with this uptrend quite intense, there is risk building here for some form of a pullback. We would need to see at a minimum on a very short-term basis break down and close back below 2465, but ultimately here a break back below 2400 would be required to set the stage for an overdue top in this market. Gold. So gold continues to show just how well supported it's been over the past several months. Dips, even though they've been intense, have been very well supported, and this latest drop that we've seen in recent days has been supported ahead of 1200, ahead of this latest bullish break back above 1250. The market now should be looking to extend this run towards the 2017 high at 1296, above which exposes a retest of that 2016 peak at 1375 further up. Any setbacks that we do see in this market should continue to be very well supported ahead of 1200, with only a break back below that level to compromise the constructive outlook for gold.